While the global retail crowd remains fixated on the daily fluctuations of Western markets, trapped in a cycle of reacting to the latest headline from Washington, the repetitive noise of the SEC, or the newest legislative delay from the US Congress, a far more sophisticated and powerful financial machinery is being assembled in the East. We are witnessing what I call the Great Divergence, a pivotal moment in financial history where the noise of the headlines has completely separated from the reality of the global infrastructure. The true signal, the one that will ultimately move the needle of global finance for the next decade, has officially shifted its axis to Tokyo. When Franklin Templeton, a global asset management titan overseeing more than 1.6 trillion in assets, chooses to sign a landmark partnership with SBI Holdings, the undisputed architect of the Japanese financial frontier, they aren't just betting on a digital asset, they are betting on the birth of a new global monetary standard. This is not a speculative experiment or a mere pilot program designed for a press release to generate hype. This is a strategic convergence that only occurs once in a generation. With the official rollout of the RLUSD stablecoin this quarter and the historic reclassification of XRP as a regulated financial product under the FIEA, we have moved beyond the realm of theoretical utility. This is the moment where the world's fourth largest economy codifies the utility of the XRP ledger into its very legal DNA. You don't just watch a move like this. You analyze the gravity it exerts on every other market in the world. Japan is no longer waiting for the West to lead. They are setting the gold standard for institutional adoption, while others are still debating definitions. To truly grasp why Japan is now the center of the digital asset universe, one must look beyond the price charts and deep into the architecture of the law. For years, XRP existed under the Payment Services Act, PSA, seen merely as digital cash or a means of payment. But as of January 2026, the Japanese Financial Services Agency, FSA, has enacted a structural revolution that changes everything. By moving XRP under the Financial Instruments and Exchange Act, FIEA, Japan has officially granted it investment-grade status. It is now legally equivalent to a blue-chip stock, a sovereign bond, or a regulated financial option. This shift is monumental for the flow of capital. Think of the massive Japanese pension funds, the multi-billion-dollar insurance giants, and the traditional wealth managers who were previously barred by law from holding crypto assets due to their speculative classification. Those floodgates are now officially open. The legal uncertainty that has haunted this asset for years has been completely vaporized in the Japanese market. We are targeting full implementation by Q2 2026, providing the global market with the one thing it has been begging for: absolute regulatory certainty. With great regulatory clarity comes massive institutional participation. Tick tick. Under the new FIEA framework, the Wild West of crypto has been tamed and transformed into a professional playground. Tick tick. Every exchange and liquidity provider is now mandated by the state to operate with the transparency of a public stock exchange, disclosing volatility, technical traits, and issuer relationships with rigorous precision. Tick tick. But the most critical part, the part the mainstream media is still ignoring, is the explicit ban on insider trading and market manipulation within the digital asset space. Japan is cleaning the house to make it safe for the world's largest capital allocators. While the US and Europe remain trapped in a cycle of regulation by enforcement and contradictory court rulings, Japan has codified the future into law. They are building a tokenized economy where 13 million local account holders, that's 1 in 10 Japanese residents, can now trade digital assets with a flat 20% tax rate, aligning them perfectly with traditional stocks. This is not just a tax break. It is the total legitimization of the asset class. If you think this is just about rules and regulations, you're missing the engine driving the machine. SBI Holdings is not just participating in this shift, they are architecting it. In a move that shocked the global markets in January 2026, SBI formally submitted an application for Japan's first ever dual asset crypto ETF. By pairing Bitcoin with XRP in a single regulated vehicle, they are signaling to the world that XRP is a fundamental pillar of the new financial system, not an alternative, but a necessity. When the CEO of SBI, Yoshitaka Kitao, a longtime advocate for the XRP ledger, responded to talks of a delayed 2028 timeline with a simple social media post saying, "Too late." He wasn't being arrogant, he was being realistic. The rails are already built, with RLUSD distribution beginning through SBI VC Trade this quarter. XRP's role as the native bridge asset is being solidified in the real-world economy. This isn't a pilot phase for the 47 major banks in the Japanese consortium. This is the commercial launch of a decade-long vision. They are creating a tokenized economy where real-world assets, stablecoins, and institutional liquidity all flow through the same decentralized rails. As we move deeper into the first quarter of 2026, all signs are pointing to a specific window of time: March. This is the official convergence point, where the Web3 Salon initiatives, the Billion XRP Japan and Korea Fund, and the full FIEA implementation all meet. We are about to see the switch being flipped on a massive wave of enterprise-level startups running on the XRP ledger. The utility of the XRPL is moving from a YouTube talking point to a daily tool for Japanese supply chain finance, real estate tokenization, and instant cross-border settlement. When the fourth largest economy in the world sets this gold standard, the rest of the world, the UK, the EU, and eventually a hesitant United States, will be forced to follow suit or risk losing the global tech race. The journey has been long, the bottlenecks have been many, but the finish line is now clearly in sight. The question you must ask yourself isn't what the price is today. It's whether you are watching the noise of the past or the regulated institutional future being anchored in Tokyo right now. In an era defined by emotional volatility and market noise, we find our strength in data, discipline, and composure. Success is rarely found running with the crowd. It is found in the quiet, rational analysis of the structural facts. Thank you for your time and for choosing to be part of a community that values logic over hype. Stay focused. Stay patient. We don't just watch the horizon. We prepare for the world that lies beyond it.